This is the first insured institution of the year to fail. Those are the words coming out of the FDIC as they take over SVB, Silicon Valley Bank. Let's unpack this statement for a second. So FDIC, the branch of the Fed that covers deposits up to $250,000, they're saying this is the first insured institution to fail. Let's unpack that a little bit more. The first, not the last, the first institution. The first institution. That implies that there's going to be more. And should we be surprised? Maybe. I mean, hold on. Let's take a step back here for a second. Yes, this is dramatic. This is the 15th or 16th largest bank in the country, failing out of nowhere. I did not have this exact situation on my radar. But it makes a whole lot of sense. Interest rates have changed dramatically. Of course it's going to impact banks. There's no way that's not going to impact banks at all. And that's exactly what's happened here. So it started with FTX. Crypto crashed. They didn't protect against that. What happened? Poor risk management. Not adapting, not being smart people. Okay? That's what happens. The Fed has telegraphed this. They have made it very clear what they're going to do. There have been no surprises from the Fed. And some people are winning and some people are losing. That's just how it is. And Silicon Valley Bank decided to not listen to the Fed, I guess. They decided to fight the Fed, I guess. I mean, I don't know. I don't know what their portfolio looks like. I don't know the specifics. I get it. They sold a portfolio at a loss. They tried to do an equity raise. They're just trying to get all the capital that they can to cover deposits. And it's causing them to implode. The question is, we don't really know who else was that dumb. Based on my assumption being the only guy who made it through Monday, I'm obviously not the only guy. Obviously. Okay? Plenty of other good, sharp guys out there. But that made it through Monday when Goldman Sachs fired their chief equity strategist, upgraded Apple to a buy for the first time in years. Mike Wilson capitulated, talked about a short-term rally having more room to run. That's the dumbest thing I've ever heard. Why are you telling people that? Why? Why are you telling them how to short-term day trade? No, that's BS. My assumption is he was just getting hammered by the bulls, by other people at the firm. They were pressuring the shit out of him. So I think there's a whole lot of bulls that were crazy, and I think they're going to get wiped out. And yeah, I think that some banks were the same way, constantly lending, and interest rates were going up, and the debt they had was going down value because nobody wants to buy a lower interest rate debt bond when you can buy a higher interest rate one. Why would you do that? Unless there's a discount, and that's a real textbook thing. You can go look up if you don't know about that. But bonds with discounts to bring their interest rate up to market rate so it can actually sell and trade. Otherwise, nobody's going to buy the same bond at a lower interest rate. So that's how the system works. That's just how it goes. That's just how it goes. So, there's not a whole lot I can add here today. We really just got to see how things play out. I'm staying short. I realized a little bit of my exposure on the short side, which I didn't do yesterday, in the last 10 minutes of the day. I don't know how much that affects you. But you do have to realize games from time to time. Like I said, the important thing here was, what was the FDIC's response? The first. Okay. Next week we got CPI. And I expect it to come in hot. I get it. Biden said that he's optimistic it will come in good. I think his definition of good is different than the market's definition of good. I think he's trying to say he's going to go on like the headline, month to month headline, year over year. So he's going to compare January headline year on year CPI to February headline year over year CPI and say, oh, we went from, for example, 6.4% to 6%. Let's go. It's falling. It's not, just like he said, zero inflation back in August, just like that, when it was 0% month on month. And that's just a load of, as he would say, malarkey, because last month was the highest month on month CPI or PCE read, which is the Fed's preferred inflation gauge. So let's not get too far ahead of ourselves. Tied for the highest of the inflation bout. So it's up there. Jobs definitely strong. I mean, it's, CPI, 6% year on year CPI is a lot different this year than, 6% CPI in the same month last year would have been. Why? Because it's a bigger base. We've inflated the number. 6% of 100 is 6. 6% of 120 is like 7.2. So 6% is a little bit of a bigger deal now. That's why we can't let this inflation thing get out of control. It has to get under control. And the Fed is not wavering. It's a totally different thing. If this ends up being like '08, it'll be like '08, but with higher interest rates. And the Fed said, as we talked about in an earlier video this week, on Wednesday's video, Powell said, the secular trend of long-term interest rates going lower, probably over. That tells us pretty much everything we needed to know. Japan has negative interest rates. Their economy hasn't really grown in decades. Look at the Japanese stock market. We don't want ours to look like that. So, we got to get inflation under control. We got to let nature heal. And ultimately, I think things will be better on the other side. The last decade, it wasn't really that good, okay? Peter Thiel, legendary investor, homosexual. You know how I feel about those, but whatever. He's a cool guy. I like him. And I probably shouldn't have said it like that. All of us are crazy in some ways, and I think they're a little crazy. That's it. It's simple as that. Anyways, he has a phrase. It's the phrase of his venture capital firm. It's something along the lines of, we asked for flying cars, instead we got 180 characters, like or 140 characters, like the old Twitter 140 character thing. I think that is a big thing that has happened in the last decade. Well, we've had just this crazy environment. And I think the Fed agrees with that. They definitely agree with it when it comes to housing. Nobody's buying houses anymore. They're priced out of them. It's not good. It's really not good. There's so much hoarding of wealth. So ultimately, I think this will be a good thing that happens. Let's not forget the people who are inflation impacted the people least able to bear the burden. Fall of banks is going to impact the people most able to bear the burden. So that's today's video. And until next time, peace out.